Most people see candlesticks. I see exactly who's buying, who's selling, and when they are getting trapped. And that's why order flow and footprint is a game changer. In part 1, I showed you how to read footprints, the basics of delta, bid ask, and volume profile. Today we are taking it a step further. I'll show you exactly how to use footprint charts in real market from situation to situation. So this is no more about the basics of footprint. This is how you use it exactly in a real market, in a real life scenario. So let's get started with this video. So this is what your normal chart would look like. I mean, it depends whatever color you guys have set for the candles. But this is how it looks like after you have turned on the volume footprint. Now, if you just quickly zoom in into it, it shows you some random numbers. I mean, it's random if you are new to the trading space, if you are new to order flow or volume footprint in general. All right, so you guys can see literally there are a lot of numbers on your screen. Some are red, some are green. Then you can see there's delta, there's total, and a lot more stuff. So there is a dedicated video that I have created on footprint. If you guys want to learn everything about the basics of footprint, you can quickly watch that part 1, the link to which will be in the description. But before that, I'll make sure to give you a quick brief idea about what are these numbers, and then we can move on to the real life scenarios. All right, and by the time I do that, guys, make sure to hit that like button as well. All right, so on your candle, on your screen, what you see right now is a candle which is divided into two different space. First is the red part and second is the green part. That is what we are seeing. Now, what do they signify? On the left side, where the numbers are red, it shows you there are sellers. On the right hand side, it shows you the numbers of buyer. Now this is volume. It's not individuals, buyers or sellers. It shows you the total volume at a particular price. Now again, just a reminder, I'm recording this video on a weekend, so the volume probably might be low, but then this is a video which teaches you about how to use order flow in a real market. So I'll just make you understand the basics of it quickly. So when you look at this chart, on the left hand side, the numbers in red is how many sellers are selling at a particular price. On the right hand side, the numbers that you see are the numbers of buyers at a particular price. All right, so that's all the importance of left and right number. Just at the bottom, you guys can see there is a delta and then there is a total. So what does delta show? All right, so delta is the difference between buyers and sellers. Now, since you can see the number right now is in red, like minus 1.23 million, that shows that there are more sellers compared to buyers, and that's the reason why the delta is negative. There are chances where you can see the delta is in positive, just like you see it right here. There is a 3.06 million green number. All right, so that means there are more buyers than sellers. Now delta is the difference. All right, it's not the exact numbers of buyer or exact number of sellers. To get the knowledge, to get the data of exact buyers or exact sellers, you can just see at the bottom of the candle that there were 6.17 million buyers, and when compared to it, there were only 3.11 million sellers. All right, so this is what the numbers that you see on your screen. Now there are a few more addition to it which I'll make sure to cover during the video. So we have quickly done about the introduction, we have quickly understood about the basics of footprint. Now let's jump to the scenario number 1. How do we use footprint in real life scenarios? All right, so here is example number 1. How do you save yourself from not being caught up in a fake push towards the upside or towards the downside? I mean, every time when market gives us a breakout above a resistance, we feel like, okay, this is going to go pretty aggressive, the market is about to pump and we need to get into a long trade just above a resistance level. But let's be honest, majority of the times when we go long above a resistance level, we get trapped, we get stopped out, and then the market just reverses, right? That is what happens, I mean, most of the time. And that happens because you are just looking at the candles and you are letting your sentiments take over you. But that is not how you trade. That is not how you play this long-term game. Now let me give you a quick example of this particular scenario. So we do have a resistance level just around this area. I mean, just for the sake of this video, let's take this as an example. All right, and we are on a 15-minute time frame. It's good enough. All right, so right now what we get to see is the market came to our level. It was just below it. All right, and we were having an eye on this. We were waiting for a kind of a reaction from this area, but what we got to see was We came here, we sustained for some time, but then we just got a breakout towards the upside. Now majority of the traders would have literally started buying just above the resistance area because it took out the resistance level. Now the chances are very high that the market will keep on pumping, right? That is basic sentiment of a retail trader. But how do we save ourselves from not getting trapped? I mean, there were enough chances for us to get into a long trade and probably it might have played out. All right, so something like this, traders would have placed their SL below the previous low and targeting some random highs, all right, or 1:2, 1:3 or whatever. That is something which they would have done, but eventually they just got stopped out. So how do you save yourself from this? How do you not get trapped into this? Let me give you an example of this. So we are still on the 15-minute time frame. All we want to do is switch back to a 5-minute time frame and quickly turn on the volume footprint. All right, so when you turn on the volume footprint, you will see all the numbers popping on your screen now. If you guys are new to learning about volume footprint, I'll tell you, it might sound complicated, but it is actually not. All right, it's pretty simple if you can just spend some time learning about it. I can literally assure you this is one of the most easiest tool that you guys can use if you have the right guidance. Now we are back at our resistance level. Now the price has started to go higher. Price was at a resistance level, it caught that breakout. Now we are above our resistance level, and just as I said, on the top there are a lot of buyers. I mean, if I just quickly zoom in, what you guys can see is almost 1.4 million buyers and then another 1.38 million buyers. So there was a lot of buying right at the top. All right, so let's see if this was happening in real time. We could have easily spotted that, okay, a lot of buyers have stepped in, and that is not a good sign. I mean, it's not that easy for retail traders to get into a trade and probably just ride the wave. That is very rare. And now if it's pretty evident that all the retail traders are buying at the top, I mean, there's no way to find out if it's a retail trader or institutional money, but there's no way if institutional money starts to buy, it will just show you a 1 million position. That's not possible. I mean, the numbers would be pretty much higher, but again, that's pretty much subjective. Now getting back to the screen, we see 1.4 million buyers at the top, another 1.38 million buyers at the top, but the price is still going lower and lower and lower. This was clear example for us that if we plan to get into a long trade on the closing of that particular candle that I just showed you guys, all right, if we plan to get into a long trade there, it does not make any sense because there are so many buyers. If the price had to continue go higher, it would have just kept on going because again, it had more than enough buyers when compared to sellers, but that is not happening. All right, if I just get back to the normal candles and clear out all the noise, now what you see is a normal candle at the top, which was kind of an invitation for a lot of traders to start to buy because we got that breakout of the resistance level. But if you would have spotted that a lot of buyers are getting trapped at the top, now the price has started to grind slowly lower. That is a clear indication that the bigger players were exactly sitting around that area who have absorbed their small quantity, and now because again 1-2 million is still a small quantity for the bigger players, yeah, so they just got absorbed at the top. Now this is clearly what a manipulation looks like. All right, buyers getting trapped at the top, and when you spot them out, you could have easily went short at 117.8 or 117.7. you can just ride the wave to the downside and make money. So it's that simple when you start to use this. I mean, it clearly acts as an X-ray in the market. All right, that if you plan to enter here, there is more than enough buyers trapped, more than enough sellers trapped. So it helps you to not be one of those traders who are getting trapped, but it helps you to get into a trade which will be in the favor of the market makers. All right, so you will be entering into a trade which is in the direction of the market makers and not against them, and that is exactly how we want to trade. All right, so that was scenario number 1, how you use volume footprint in a scenario when there are chances of a fake breakout. Now let's move to scenario number 2. So the scenario number 2 is about spotting reversal. I mean, how do you find out if a reversal is bound to happen? I mean, the market was in a range, it pretty aggressively went towards the downside and has started to go slightly higher. How do you spot if that push towards the upside is a fake move, or is there enough fuel in the market that will keep the price going higher and you will be riding the wave when the market have started to reverse and your trade is not going to be another trap trade? How do you find that out? Now we can spot the same scenario here. All right, the market was ranging for a pretty long time. All right, we are again on a 15-minute time frame. it gave you a pretty aggressive push towards the downside, and after that it just reversed. All right, now again I'm spotting this all on the smaller time frame, but all of these things they actually work on the bigger time frame as well. All right, so time frame, it does not actually matter. The bigger the time frame, the higher the confirmation is, but then again, just for the sake of understanding, I'm keeping it on the smaller time frame. So what we want to do is, when the market started to go lower, we could have just easily turned on our volume footprint. All right, and once you turn that on, what do you see? The exact level where the price has reversed from. Before that, what you could have spotted is a blue box which is extending towards the right side. I mean, what is this particular box and why do we have it on our screen? I'm sure if you guys have watched the part 1 of this video, you already know what it is. All right, so this is called as imbalance. Now imbalance occur when there are 300% more buyers than sellers. So then you see this blue boxes. When there is red boxes, that shows that there are 300% more sellers when compared to buyers. All right, now there are different levels, different strategies that other kind of trader use, which can be fair value gaps, which can be order blocks. But then again, all of these things that you are using, be it order block, be it fair value gap, the chances of them playing out are very low, because you are assuming that, okay, in this particular area, I assume there might be a lot of XYZ kind of limit orders or pending orders, and when the market hits that particular box, I expect it to reverse from there. I mean, that's purely assumption. All right, there is nothing to back it up. All right, so that's the reason why every time you mark an order block, most of the time it fails, or it gives you a pretty late reaction, and then you just say to yourself that, okay, the market reversed, but I was wrong. It's not you who's always wrong. All right, I'll tell you this, it's not you who's always wrong. Probably there's some issues with the strategy, there's some issues with the marking of the levels and whatnot. All right, so here what we could have done is, we could have easily marked this particular level. All right, and as soon as the price started to go in our favor, it did hit our level. All right, so we had this particular level marked. Now all that we had to do was quickly turn on the volume footprint, and once we do that and zoom in a bit, what we could have spotted here was pretty much evident, pretty easy. We could have easily spotted all the trap traders. Right at the bottom, what we get to see is there is almost a 10 million negative delta. What does that tell you? That there are a lot of sellers when compared to buyers. But what is the reason? Why has the price started to go higher? That is because all of these traders have got trapped, and now the price has slowly started to squeeze them out, and the price will continue going higher. So you had enough fuel to trap the traders. Now there are other ways as well to judge this. I mean, I'll make sure to keep this video short, and I'll talk more about it in the live streams as well, but there are a few steps which you do need to follow. But then again, it's not complicated. I'm just telling you guys, it's not complicated at all. All you have to do is just learn about these numbers, try to understand them. I have actually created a dedicated program which is called as Footprint Mastery. All right, so if you guys want to learn more about footprint charts, if you guys want to learn more about TPO, if you guys want to learn more about SVP, I mean, I use all of these advanced tools. All right, so if you guys see here, there is volume footprint, there is time price opportunity, there is session volume profile, there are use of open interest, there are use of CVDs, and so much more that I do. If you guys are interested in learning everything about all of the advanced tools that I use, the link to that will be in the description. I have created a dedicated program around it. All right, so this is how we could have easily spotted a reversal in the market. So the level that we were looking was given to us by footprint itself, the confirmation given to us by footprint itself, the numbers that we were looking at was given by the footprint itself. So you see, the manual work was extremely low. You do not have to mark levels, you do not have to look for some random indicators for confirmations. Everything that you needed, footprint did it for you. All you had to do was either have some experience, some learning about footprint, and that easily you could have entered a trade. Now, something that I would tell you guys about footprint is, majority of the time when a trader is getting into a trade, they aim for a 1:2, 1:3 kind of trade. But with footprint, it's pretty easy to get into trades which are 1:5, 1:6. And it's not because it gives you some magic entry. It actually does. But the magic of footprint is in the SL. It makes your SL so small that now you can risk the same and target a lot more. All right, so that is another thing that footprint does for you. So that was scenario number 2. Let's move to scenario number 3 as well. So if you guys remember, in scenario number 1, we were talking about how we could save ourselves when you use footprint from the fake breakouts. All right, I mean, most of the time we expect a breakout to happen, we get into a trade, and then we just get stopped out and we lose a lot of money, right? But I'm not going to leave you guys hanging. I'll also teach you guys how to confirm if the breakout is good enough to get into a trade or not, or if there is a push in a particular direction, is it sustainable enough or not. All right, so here what we can see is we had a good range. All right, we could have easily marked this as a resistance level. All right, market was reversing exactly from that area, and then we also got a breakout of it. Now how do we find out if this breakout that we are seeing was going to keep on pushing higher in the live market and not literally just reverse like it did earlier? All right, for that to happen, what we could have done is, obviously we have marked our level. Quickly we will turn on our volume footprint as well, and when we do that, what do we see? When the market started to go higher, it had a buying imbalance. So that means even before the breakout happened, there were 300% more buyers than sellers. Now this is a great sign. And when we look at our resistance level, what we can see is when the breakout happened, a strong closing of 5 minutes above our level. So that is something which is about the price action. But then if you look at the delta, all right, deltas are positive. You had 800k positive delta, and then you closed above your resistance. The very next candle had 1.46 million positive delta, again shows that the buyers are in control. In the very next candle, what do you get to see? There is a negative delta. And even though there are negative delta, but the market is still able to sustain, it's not going lower. So that shows you a sign that the market is pretty strong, even though the shorts are trying to be aggressive, but they are still not able to push the price lower. So this shows you that the breakout that you are trying to be a part of is actually a good breakout, and you could have easily entered as soon as you saw this 300% buying right above your resistance level. All right, because even when the buyers were entering into the market, the price was not reversing, because in that scenario they would have got trapped. But the price kept on going higher. It kept on making 300% more imbalances, 300% more buyers. So that shows that it's pretty obvious that the breakout that we are trying to be a part of is very strong, and we can take the trade there. Now in this particular video, you guys just saw how I use footprint in different scenarios. Now there are a lot more scenarios, there are a lot more ways to use footprint. It was literally not the only limited ways to use footprint. You combine this with order flow, you combine this with a lot more other tools. Like I like to use TPO. So this is what a TPO chart looks like. I mean, again, as I said, all of these tools that I use, it might look like, okay, this is pretty complicated, I do not need this. But then all of these tools, they are not here to give you a buy sell signal. Rather, they will help you understand the price action, the momentum, the money inflow, and everything. All right, so that you can make an informed decisions. Most of the times we try to buy on a support level and sell on a resistance level, but then we literally get trapped. We buy on a support level and the price just keeps on falling. We sell on a resistance level and the price keeps on pushing. These are the tools which gives you an idea, which gives you data, all right, that the market makers are entering at this particular level. Market makers are selling here, so that when they are selling, you do not buy. When they are buying, you do not sell. All right, so this is one of the tools called as TPO. Now this helps you to understand if the highs that we have made are good enough, if the lows that we have made on the basis of price action, is it good enough or not. It also marks some of the most important levels for you guys, so that you do not get trapped and you are trading on levels which are data backed, rather than just assuming that because the price has reversed twice or thrice from a particular zone, I expect it to reverse again from there. That is not how it goes. All right, I've been trading literally for a very long time now, and I would say trading on the basis of assumptions will probably not make you a good trader. But then again, that's pretty subjective. Trading in itself is subjective. If you can master the art of assumption, I guess probably you can still make money. But then it's on your edge. Are you good enough with the price action? Are you good enough with the naked chart and still make money out of it? If you can do that, I would say you do not need anything. But this tool that I was just talking about, be it TPO, be it SVP, be it footprint, and a lot more other tools, will help you to ease your trade, to keep you away from the manipulation and not take the trades which you are not supposed to take. All right, these tools, they literally tell you where you are supposed to trade, where you're not supposed to trade. They help you to create a bias. All right, they will help you that, okay, today the market is supposed to be a ranging market. It's supposed to range towards the upside, towards the downside. Today the market is supposed to be in a grinding phase, in a chopping phase. All right, so all of those things, these tools will help you understand. All right, so that's not it, to be honest. I also use open interest, I use CBD. There is a dedicated template that I use that you are seeing on your screen as of now. I try to use that as well for some better confirmation, for swing trades, for big opportunities, for bigger moves to capture. I like to use all of this. And if you guys are interested in learning more about it, as I said, I have created a dedicated program which you guys can join as well, the link to which will be in the description, and I'll be more than happy to see you guys there and answer your questions. And again, you guys have already watched this video. If you have any questions, make sure to drop them in the comments below, and if you have watched the video till now, make sure to hit that like button as well, and I'll see you all in the next video. Bye.